Ethereum has firmly positioned itself as a frontrunner in the crypto market, second only to Bitcoin in terms of market cap and popularity. While Bitcoin is often likened to digital gold due to its fixed supply, Ethereum breaks new ground with its smart contract versatility, offering new possibilities for dApp ecosystem. This distinction has sparked a growing interest in Ethereum-based ETFs, with Ether traders keenly observing the market trends. The U.S. Securities and Exchange Commission recently approved the first Bitcoin ETF, sparking renewed hope for Ethereum ETF approvals. Several applications are under review, including the highly anticipated Grayscale Ethereum Trust conversion to an exchange-traded fund. Ethereum ETF approvals could propel Ethereum's adoption, boost its price, and attract institutional investors seeking diversification with this innovative asset class. Alright, so what are Ethereum ETFs? Think of an Ethereum ETF as a basket of securities representing Ethereum's value. Unlike directly buying Ethereum on a cryptocurrency exchange, these ETFs trade on familiar stock exchanges like the NYSE. This opens the door for traditional investors accustomed to the ease and security of regulated platforms to gain exposure to Ethereum's price movements. Forget managing digital wallets or navigating complex exchanges. Ethereum ETFs offer a familiar experience with the potential upside of the crypto world. Furthermore, the concept of a crypto ETF, particularly Ethereum exchange-traded funds, has captured the attention of investors worldwide. An Ethereum ETF, or an ETH ETF token, is a type of investment fund that shadows Ethereum's market value. Unlike direct purchases of Ethereum on a cryptocurrency exchange, an Ethereum ETF is transacted on traditional stock exchanges. This allows investors, especially those unfamiliar with the intricacies of cryptocurrencies, to partake in Ethereum's market movements without the complexities of digital asset management. Now, how does an Ethereum-based ETF work? An Ether ETF provides investors with Ethereum's price movements without requiring them to purchase and hold the cryptocurrency directly. This is achieved by the ETF investing in Ethereum or Ethereum-based assets on behalf of its investors. So, let's talk about the benefits of Ethereum ETFs. An Ethereum ETF wouldn't just be a trendy buzzword. It would bring several game-changing advantages such as accessibility, legitimacy boost, liquidity lifeline, and reduced security risks. Here is my closing thought on Ethereum ETFs. With broader adoption and institutional involvement via Ethereum ETFs, the crypto market could mature, potentially stabilizing volatility and attracting further investment. New and innovative crypto-related financial products and services could flourish, fueled by the increased interest and accessibility spurred by ETFs. Plus, these could open the door for more of the top-traded crypto assets into the ETF game. Projects like Solana, Cardano, etc. could find their way into this class of financial game. Let me know what you think about this in the comments section.
Alright guys, give this video a thumbs up if you learned something new. Share and subscribe to encourage the work that we do. Don't forget to check the description below for our Telegram channel link, where we would be sharing fascinating crypto information. Till I see you again, stay curious and keep learning.